What's going on, investors? Thanks to today's green day, I finally eclipsed $38,000 for the first time ever in my investing career. So you can see the progress from when I first started investing in the spring of 2018 to where I was just a year ago to what I've become today. And it's been a long journey, but the best parts have yet to even come. And that's what's really exciting and even more cool is that I'm actually beating the market in the past year here. So you can see my return is about 9.3% in the last year. I don't believe Robinhood includes dividends, so it's actually closer to around 11.3%. And then when we look at the VU here at 7.29% and adding in their dividend yield, so it gets you at around 9%. So happy to say that dividend growth investing, I think this just proves that you don't always need to be investing and speculating in the latest hot stock to get great returns in the market. Sometimes just going the slow and steady route, that will get you great returns as well. But that's not the point of today's video. The point of today's video is that I know you love dividends, and what's better than getting them monthly. So today I'll be going over the 3 monthly paying dividend stocks I own and what I think of them going forward. There's actually one that I no longer even like, and one that I'm actively buying dozens of shares of each week currently. So last month I actually cracked over $100 in dividends for the first time ever, and I have no plans of slowing down. So be sure to hit that like button and subscribe to the channel if you want to follow along on this journey. I will be documenting it all the way through on YouTube here for your guys' enjoyment. So let's get started here with the very popular monthly paying dividend ETF, and that would be none other than not Amazon, but SPHD. So this is the Invesco S&P 500 High Dividend Low Volatility ETF, SPHD. So this is not a company, but an ETF. It's really just a basket of different companies, and this allows for further diversification across many different industries. And if the stock market generally it goes up over time, we're gonna hope that this ETF generally goes up as well. So SPHD aims to grab the 50 least volatile companies in the S&P 500, 75 highest yielding dividend stocks. So it does actually have an expense ratio of 0.3%, and that's not exactly cheap as maybe Vanguard, which can go for even less. SPHD is currently only invested in American companies, and financials, consumer non-cyclical, and utilities actually make up nearly 65% of all their holdings. Some of the sectors with the biggest growth this year, like tech, only make up 2.5% of their portfolio. Looking at individual companies like Iron Mountain, Williams, and Altria, those are the leading individual stocks. Currently is paying about 15 cents a month in dividends, for a total of $1.83 a year, or about a 5.4% dividend yield right now, and they are taxed as qualified dividends. Now, the reason why I'm not going to be adding any more shares of this ETF right now is just because it has consistently underperformed the S&P 500. In the past 10 years, it has had less than half the S&P 500 gains. 80% return compared to 166% from the S&P 500, and that's including the dividends reinvested. SPHD is also down, just in this past year, it's down 18.5% year to date. So that's really why they should drop any sort of low volatility claim from their name. Getting dividends is nice, but when you're not getting those big capital returns from sectors like tech, it's going to be really hard not to justify just putting my money into an S&P 500 ETF versus just putting my money into SPHD, where I'll probably underperform the market. So you can see here I have 6 shares. I've actually lost money on this in terms of total return. It's going to be close though once I add in all the dividends, but luckily it only makes a small percent of my portfolio. So once we go here and we filter out the dividends, I've held this really ever since I started investing. So you can see here every month I've just been consistently getting dividends, although very small dividends. If you continuously get 40, 50 cents every month, it will eventually add up. So I'm just going to hold it here, even though I don't believe in this ETF in the long run. I'm just holding it now just for more sentimental memories rather than actually getting rich from it. So let's actually get onto a next company, which is actually performing really well, and I will probably be growing rich from it over time. So Visa, Equinix, UNH, 3M, Applied Materials, Tesla, but the one that we're going to be talking about right now is Realty Income. This is a real estate giant, And I know a lot of people pronounce this reality income or a combination of the two, realty income. It doesn't really matter how you pronounce it. All that matters is the dividends that you receive from it every month. So these guys have actually returned 15% annually since it was first IPO'd in 1994, and it has actually never had to cut its dividend, not even during the Great Recession of 2008. I think most people have heard of this one, so I'm not going to dwell on it too much right now. Right now, you can get it for nearly a 5% starting yield. Remember, you can't judge a real estate company based on PE to value it. That's because they write off depreciation to avoid taxes. Really, those expenses aren't as big of a hit as they might seem, as real estate actually tends to appreciate over time, so we wouldn't actually be losing money there. So take a closer look at funds from operations, or FFO. That's a more accurate estimate of the actual earnings of the company. Realty Income is nicknamed the monthly dividend company because it pays out that monthly dividend. It owns over 6,500 commercial properties that are under long-term net lease agreements in 49 different US states, as well as a little bit of international exposure as well. The bulk of their tenants are essential businesses such as drugstores, dollar stores, grocery stores. All of these are essential and they're not going to be going anywhere. These places will not shut down, which means that they can continue to pay O rent, which means O can pay us dividends, and everybody's happy. For the most part, I hope. In June, Realty collected 86% of its rent. Rent deferral is not the same thing as rent cancellation, so that other 14% they can collect at a later time. Real estate is one of the best investments to make. However, I can't just go and afford the real estate down the street on Zillow, but I can easily invest $60 into this great company and get paid monthly dividends from this dividend aristocrat. I'm gonna keep buying O, not just because I have drip on, but because it's just a great company, and I'm gonna be consistently buying more shares every time I really see them less than $60 a share. I think that's a steal. So this is another one that I've owned for a really long time, and you can just see her every month. They just continue to pay me. And even if we scroll up here, you can see that gradually these dividends have went up over time, as not only O continues to raise their dividend slowly every month, I am also buying shares every month, and now it's being reinvested or dripped. So the amount of payment that I get from them every month is going to go up. So that's really exciting. So currently I have 13.09 shares. Every last little bit counts here in our fractional dividend investing journey here. So we have a little under $1,000 of equity. Hope to get them to $1,000 by the end of the year. And I'm up a little bit on them in terms of total return, but once you add in all those dividends, I'm sure that return is a lot higher. All right, the next one, I actually just bought 17 shares of them this week, and that would be none other than QYLD. I'm actually up to now 51 shares of this covered calls ETF. It's called QYLD, and I was actually surprised how many people hadn't heard of this ETF when I first talked about it in last month's video. It certainly has gotten a cult-like following here on YouTube, and we can even see on Robinhood the amount of people that are buying this ETF has consistently gone up and up. So this ETF actually gives you about a 12% yield, but this is no dividend yield trap. They actually do selling of call options. They use that strategy to own some of the big names like Apple, Microsoft, Amazon, Facebook, Google, Nvidia, Netflix, Adobe. All of these are great companies. And all these companies are not only large in terms of market cap, their share price is actually really high, which means you can get more from doing calls on them, although it's a little bit more riskier. So they pass all the money that they earned in those premiums onto us as dividends. Options are, of course, risky, but having an ETF like this minimizes that risk level a little bit. And doing this on your own is certainly not a passive strategy. Not like just owning the 500 stocks that make up the S&P 500. There's actually a good amount of analysis and close attention one needs to do if they're going to be doing options. And I don't have the time to do that. So this is one of the few circumstances where I wouldn't mind paying somebody an expense ratio, because this would be really hard to do for yourself. And I'm not even going to talk about how hard doing an options call on Amazon would be. You would need $300,000 in equity to even do one option. And that's that Patrick Mahomes money, guys. And that's the goal that I think that we're all trying to reach for here in our financial goals. And it's definitely not out of the picture, but I hope to get 100 shares of QYLD here, and I think I'll be able to get that by maybe next month. I've been buying a lot of shares of them, and that would actually be about $2,000 in equity, and that would actually drip me $20 in dividends every month, which isn't too bad. You can see that I've only actually held this one for a very short amount of time. So unlike the other ones where a little scrolly bar comes along here on the side, this one I've only owned for a month. So for that reason, I don't get any scrolly bar, but eventually as I own this and as they pay me monthly dividends, I will have that little scrolly bar as well as $20 hopefully every month, or maybe even more. So let me know if you guys like these monthly dividend stocks, and let me know if there's any that you guys like that I just possibly missed, or any that I should look into. I'm always happy to hear some suggestions in the comments below. Be sure to subscribe so I'll be motivated to continue to put out great content for you guys.